Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club, and welcome to the weekly Forex forecast for the week starting of 13th to the 19th, actually 18th, January 2019. So here we are back with the weekly forecast. Previous week we saw the annual forecast, long-term plan. This week we are back to the shorter-term plan, the weekly forecast. So first of all, thank you very much for watching the video. As always, I appreciate your time and thank you for watching my materials and my work. If you enjoy it, please show your support back, hit the like button, drop some feedback below. Your support, my motivation, and the reason, keep doing that. If you are new to the channel, then please subscribe on the button below, and I invite you to join our totally free Telegram channel. And to join, just go below in the description or in the comments and you would find the link to join our community. So let's begin. A quick reminder, on Monday I will publish the PDF format for the weekly forecast. So just come back to the video below in the comments and the description. You would find the link to the PDF, or just follow up updates by email if you are in the newsletter of mine. So the first one for today is the dollar versus the Canadian, a pair I love and a pair that dropped very beautifully. So what do we have on the longer view here? We have a triple cycle from the weekly chart, and the last divergence is bearish from the weekly chart, so we expect a move down. Such move should bring a corrective cycle from the lower time frame. Corrective cycle could be two waves or a range. That means we might be exposed to two waves or some kind of a longer run range. But it's too early to see anything like that developing. It doesn't have structure of range. Ranges normally start with false breakouts. This one did not, so most likely this is what we are exposed to. That means we expect some short-term corrections. That could be in two waves and a continuation. That could be a rally with a bearish hidden divergence to be created. Get some good resistance and start the sell. As you can see, we have several marked zone here and here. I don't think we are going to here. Very likely we are not. But you know, everything could happen. I do believe we could go and clear this area before we start to sell off, and we should see how it develops. So sell the rallies. The correction should be, as I said, in one of the two variations, two waves or bearish hidden divergence, or a combination of both, very acceptable. Or yes, it could turn to be some kind of annoying range as well, or consolidation pattern, anything like that, before the continuation down. So sell the rallies for dollar CAD is our plan. The next one on the list is pound versus the dollar. We'll try to make it simple. The last divergence from the pound and the last cycle is double cycle with a bullish divergence. So wow, that's an ugly arrow. Here, much better, right? So we would expect a rally. This means simply the corrective cycle should come from the one lower time frame, and we could be exposed to that in two variations, 1, 2, or some kind of a range. We already have some false break. We might get some ranging pattern here. It does not change the game for us because the plan is buy retraces. The recent rally is coming from the expectations and the possibility that Brexit would be postponed, as Britain has few laws that they want to finalize before Brexit takes place. That's the recent energies the pair got. So the momentum is bullish, so retraces to be bought. That could be a little pullback for further continuation. That could bring us some two waves and a bullish run, and we should be looking for buy levels. We have a very powerful zone here and slightly lower. The next area sits a bit lower, around the 127. That's the places where we should be looking for bullish evidences, like bullish candle structures, higher highs to be created on the lower time frame, false breaks, bullish divergences, and any other bullish evidence with the strategies you work with and you trade. Next one I have on my list is the euro versus the pound. Very interesting opportunity for this week. By the way, just want to mention, if there is any pair that I do not include, that means I do not have a clear view as for now, the time I create the video. It might change during the week, of course, but as for now, it's not too obvious and too clear for me. So I try to cover the most interesting and clear opportunities the market has for us. If you have any question about any of the instruments which are not included, drop the feedback below and I'll try, if I have a view, to share it with you and to help you out. Okay, so let's continue. And of course, I invite you, if you are not yet in the Traders Academy Club, I invite you to join us and enjoy from daily updates from live trading rooms covering the most interesting opportunities. So the euro versus the pound, the last divergence from the weekly is bearish with this false break occurred right here. And we would expect a sell-off at that moment. So looking on a daily chart to support our weekly view, we already see that the pair is trying to start and create lower highs and does the attempt to create lower lows. It does not have any opposite sign. This is also false break of this top. Fake attempt to make a breakout, a new high. 4-hour chart does not have any signs against us as well, and the structure starts to look like as a sell the rallies. So sell the rallies would be the plan for the euro versus the pound. We do have the next levels to pay attention to, and that's the cube, which we very likely would be heading toward, right? And from there we should start and see where we get opposite signs, like opposite divergences. Meanwhile, everything looks good. Sell the rallies is the plan. Next one is the dollar versus the yen. This pair, I created a special video. If you missed it, you can go to my channel and see that 5 minutes video or 6 minutes video about the dollar yen and the opportunity that it might be one of the best trades for the year. So watch this video if you missed it. Let's move on here. The expectations here are simple. This is a bearish structure the pair has for us. The last divergence the weekly chart has is bearish. Therefore, we are still in a bearish mode. This is an inner candle, basically continuing the bearish pressure. Daily has to make some corrective cycle. By ideal, it would flirt here until the daily would become some bearish hidden by ideal, which means one more high on the histogram and then a sell-off. Watching on the 4-hour chart, we would figure out that this is the corrective cycle it's trying to build. We have critical zones here, which we might go and see in a sell. That might also hold this resistance, create this divergence, and start the next sell-off. Keep in mind the dates for this possible sell. We have a beautiful zone of days coming at the beginning of the week, 13 to 15, few critical days here that might push that down again. So keep an eye on the dollar yen. Next one on the list would be the CAD versus the franc, a pair I love. The last divergence from the weekly chart and the bullish cycle is this, which means bullish. Last divergence from the daily was bullish as well. Now it starts to show some slowdown with this bearish hidden divergence, but bearish hidden divergence could be a hint for a sell if the higher time frame does not have signs against us. In our case, it does. So that's a suggestion for some pullbacks before the rallies. 4-hour chart suggests triple cycle. So we would expect here some kind of corrective cycle right now. That could be 2 waves and a rally, or that could be some kind of range and then a rally. This or other way around, we want to buy drops with bullish evidences. So the last trend line we have available here is this. The previous one is this. Critical zones we have all this area as a very, very beautiful zone to pay attention to, and the next one as well, right here. We want to pay attention to these areas and look for bullish evidences. What bullish evidence might mean? Bullish candle pattern structure on the lower time frame. Look for higher highs, higher lows, trend reversal to the upside again, bullish divergence, of course, and bullish false break to the upside, which means attempt to create some lower lows during the correction and switch up again. The next pair on the list is Aussie versus the Kiwi, a pair that I love generally. I'm looking for buys here due to the fact that the monthly chart is holding its ranging pattern, weekly supports a bullish divergence here, and a daily chart currently has a bearish divergence for us, but that comes already after higher highs. So for me this is currently a corrective phase. That means this is what we are facing right now. We can see that clear right here. Let's zoom in a bit so we try to avoid a spike because the spike we saw at the beginning of the year basically make it not so clear to measure. So what we have here is the double cycle. This is the first critical zone, second critical zone, and the main critical zone, where from we would want to see bullish evidence. So once again, bullish structure, bullish divergence to form, or on the lower time frames we would want to see higher highs, higher low structure, and then start to buy the drops. As for now, no divergence is available, and as the ending cycle, it does provide a bullish hidden divergence for trend continuation, but we just saw the daily show signs against, so it would be good to see the 1 hour chart slowing down with regular divergence, basic divergence for a reversal. So anything like that would be pretty much ideal sign for us to start looking for the buys. So going back to the Aussie versus the Kiwi, we have this beautiful zone and the next important zone, and that's the places where we should be looking for our bullish evidences for further buys. If we take a look on the crystal ball for statistical days, that's what we get here. We have, where first of all we are in the structure of the bullish zone. Now we also have the supportive areas, and most importantly we were exposed. Look at the days. Okay, we have a beautiful zone here all the beginning of the month. That was that place where we saw the rally. The next important area to pay attention to is this critical days series of them, right? So that's why I think if we do keep pushing slightly more at the beginning of the week, it should be a great opportunity on the next days to come in that very week. Next one on the list is the Aussie versus the dollar, another pair that I love, simply because weekly chart forms a bullish divergence with a massive bullish candle and a bullish divergence. This is a monster hammer. It looks like more like a hatchet, not a hammer anymore. And the daily now starts to show some signs against as a bearish divergence, meaning we could expect some pullback before the rally. These pullbacks could be tradable. If we drop to the 4 hour chart, we can see that it is slowing down with this divergence. So this is pretty much the place where I think we're gonna see the exposure to the downside a bit. From there, we should pay attention to the cubes and look for further buy, again with bullish evidences. Two waves retrace to the downside, ABCD correction, bullish hidden divergence, range, could be longer range or consolidation structure, candle patterns, false breaks, trendline breakouts to the upside, and so on. Any bullish evidence in your strategies. So that's my Forex list, and then now we go to the commodities, gold and silver. The silver got for us the bullish divergence. Now we create higher highs, so we are bullish here. The daily chart offers some possibility of a pullback, and that could be 2 waves on the 4-hour chart and continuation. That could be some kind of consolidation and continuation. By ideal, I would prefer to see that slowing down a bit more, and then the daily chart creates a bullish hidden divergence for trend continuation. If we can get it, that would be an amazing buy opportunity. Same with gold, which is creating for us here a triple ascending cycle. It's time for a little pullback and continuation. By ideal, we would be exposed for that as a bullish hidden divergence, which means one more low on the histogram and further rallies from there. So that's my list as for the beginning of the week. I hope you enjoyed that and you find my work useful. If you do, please show your support back, hit the like button, drop some feedback below, and I invite you to join me and my team inside the Traders Academy Club and enjoy daily live trading rooms and full list of trading with us. So thank you very much for your time. I wish you a wonderful trading week, and if you have any questions, please contact me below. My details how to contact me and my team are below in the description. Wonderful week. Thank you for your time. I'm Vladimir Ribakov, and I'll see you soon. Bye for now.